Hey, welcome back to Lunch of the Market. Today we're going to take a look at some things that we saw on Twitter. One, Jim Cramer was asked about BHP Billiton, ticker symbol BHP. Jim immediately said, I'd rather go with Vale, V-A-L-E. Vale is a stock that Jim used to own for his charitable trust, and he's probably taking a look at again. We did some homework and went out and found what does the options market say about Vale. So when we take a look at the options chain, we go all the way out to January of 2013, which is actually not that far away at this point in the calendar cycle. We noticed that at the 22 strike, there were 30,842 options open at the 22 strike in Vale. Vale is trading right now at around $19 even. So those people that have those options are looking for a $3 move in the stock just to break even. But if this happens sooner rather than later, all the time premium will still be in that option. Also, if this thing has an explosive move higher, say it moves for $5 a share, those calls, which you can buy for around 42 cents right now, if the stock goes to 23, they're going to double. Your investment will be up 100%. So all Vale has to do is go up $4 to make it to the 23 strike, and those 42-cent calls will go to $1. So there's a good risk reward there. It's a low dollar bet. You can do a couple percent of your portfolio and not really take a big ding. And if Jim is right and you should buy Vale instead of BHP, then you stand to make a big gain. The other stock that we're taking a look at today is Nabors, ticker symbol NBR. This is the laggard of the Bakken Bunch. And when I say Bakken Bunch, I mean Baker Hughes, Halliburton, Schlumberger, all those guys are out here in North Dakota in the Bakken. So is Nabors. Nabors Drilling and Nabors Well Services and their new acquisition, Superior Well Services, all have a pretty big presence out here in the Bakken. But NBR has lagged all of the other names. So once again, we went out on the calendar to see if we could find any options activity that stuck out to us. There are 10,549 open calls at the 19 strike. Nabors trades at around just under 15 bucks right now, so it would be a pretty huge move in the stock. But again, if we get a rally in Nabors at the size and scope that we've seen in companies like Halliburton, Halliburton traded from basically $27 to $33, actually $35. So it's almost a $10 move in the stock. Certainly if you, for 50 cents, 51 cents, 52 cents, buy these 19 strike calls out in Nabors, and it has a similar move to Halliburton, your $52 will turn into quite a bit more. So again, big open interest, over 10,000 calls open right now at the 19th strike that expired in January of 2013. So investors are betting that Nabors is going to go the way of Halliburton, Schlumberger, and others out here in the Bakken Bunch, and Jim Cramer is making a call that you'd rather own the beaten down Vale with a 5.5% yield than go after a BHP that really has been stuck in the mud forever. All right, hope that helps. This new kids on the block market is hanging tough. The averages are teetering right around flat and have been there for several days. Remember the phrase, the longer the base, the further in space. That refers to a chart. If you look at a chart and a stock bases for a while, then it's likely to take off. So again, the longer the base, the further in space. So just remember that this market is probably spring-loaded. Once to one, it's going to go one side or the other. We are going to come up upon the earnings vacuum here pretty soon, so just be careful. Make sure that if you do put on long positions right now, your position size is appropriate, and or you have hedging. So if you do like the Nabors trade or the Vale trade, and you throw 2% of your portfolio in there, then it's no big deal. But if you double 2% to, you double or triple it, 2% will turn into 6 or 7% of your portfolio. So it's a pretty nice risk reward. You wager 2% to make 6 or 7%, because the people that are in these calls, especially the Vale, there's tens of thousands of these contracts that are open, and they are not intending on losing all that money. So that represents quite a big bet. The Nabors bet isn't quite as huge, but again, if Nabors sees a stock move like Halliburton, then those who are in this trade at the 19 strike call for January expiration will be handsomely rewarded. All right, thanks so much for tuning in to Lunch of the Market. Have a great day, and we'll see you sometime soon.